You've used the word crisis and credit crisis. Right now, certainly not 2008. The banks far better capitalised, not taking the risk anywhere near like they did more than 10 years ago. Where's the crisis going to be?
Well, I've been saying all along that the next financial crisis is not going to be like '08, that was household mortgages and leveraged banks, but it's going to be corporate debt and shadow banks, because the problem in the United States is the build-up of corporate debt. Leveraged loans, CLOs, $1 trillion of fallen angels in high grade. They're going to be downgraded to below investment grade. And you have the whole situation in the high yield and the junk, where covenants and all the standards and the spreads have been too low. That's where the Recession is going to be. And by the way, if you compare it to January and February of 16, when oil went to 30, at that time you had contagion to the high yield. You had spreads going from 300 to 900 because it started in the energy sector and then it spread, given the losses, across the high yield. Right now you have a shutdown market in leveraged loans, in CLOs, in high grade, in even high yield, and you're not going to have any essentially unfreezing of this market. So, and in addition to energy, you have all the other sectors like airlines and cruise ships and entertainment that are highly leveraged, that are also going to be under stress. Therefore, if in 16 you had the leverages leading to spreads going from 3 to 900, they can go much higher this time around, and the contagion is going to be more severe, unless you do something, and that's going to be probably the trick, to bail out the cruise ships, the airlines, and all sorts of other financial institutions. If you do that, maybe you can stop the credit crisis. Otherwise, we're going to end up in a credit crisis. You'll have even to bail out maybe some of the energy sector. I don't think that's politically feasible.
To be clear, you think it can happen that quickly? Because, by all means, most people, in terms of the longevity of this particular shock, think that it will be temporary. Now, I agree that if you get the right tools in place, you can stop that from becoming a temporary shock, transpiring, materialising into a much deeper financial situation that you're talking about. If we're talking about a 2-month, 3-month hit, that kind of shock to the US economy, do you really think it can do that kind of damage?
Well, you know, first of all, we're going to have a global recession, and it's not just my view anymore. If you look at PIMCO, JP Morgan, even a perma optimist like Ed Hyman, they're all saying there'll be a rolling recession the first half of this year. In Q1, it's because of China, Italy, Japan, and Korea. In Q2, it's going to be US and Europe. The question mark then is only first half of the year or spills over into Q3 in the US and Europe? And the answer to that question, if it's a 3-quarter rather than 2-quarter recession, depends, one, on the policy response. If it's not aggressive on the fiscal, it's going to be aggressive on the monetary, it could be a Q3 problem. And secondly, whether we contain the spread. In China, they've done the most draconian thing. In 3 months, they stopped it. If you look at what Italy has happened, what's happened in Italy is going to happen in Europe and the United States. It's going to be at least 6 months to contain it, and therefore we have a recession also in the 3rd quarter. Then things get really much more ugly, also for the financial system. You can survive with liquidity, with help for 3 months, for 6 months. If it's 9 months, many people are going to go bankrupt. Households, corporates, SMEs, and even some of the big highly leveraged players in energy, in airlines, and so on. Of course, the airlines are going to be bailed out because they're national security, so we're not going to let them go bust.